There are plenty of books, courses, and people who tell you when to get into trades, but where are they when you need to get out?
Foxtail from the deep.
What's up YouTube? This is Foxtail Digital coming to you again with Black Girl Stocks, and in this video we're going to be talking about when to sell and close out of your trades. Now caution, this is not a sell to enter tutorial for more advanced short selling or, collecting premium positions. This is just the basics on getting out of your trades, okay? So I get this question a lot. How do you close out of your trades and when do you close out of your trades? And this is also going to be geared towards options trading, but you can still use a lot of these concepts and tactics with other investment tools, okay? Now, it's easy to make money when you're trading. Everyone knows how to get into trades, but what you're going to find is that one of the hardest parts of trading sometimes is knowing when to get out and keep your money. How many times have you gotten into a trade, been up 50%, walked away, and then came back to being in the red? So it's just as important knowing when to get out of a trade as it is picking a good trade. Now, when you're buying long calls or put options, always remember you're holding on to a time bomb. And every day that you keep these positions open, those options lose value. In this video, I'm going to give you two simple methods to use as options trading exit strategies. One method that focuses on targeted percentages of profits and losses, and another that focuses on technical analysis and charting for exit signals. But first, if this is your first time watching this video, please make sure that you click that thumbs up button. It really helps the channel. Also subscribe and click that notification bell so that you get notified anytime I upload a new video for you guys. So the first thing I want to talk about that's going to save you a lot of time, headache, and profits is having a trading plan. So before you even enter your trade, you have to have an idea of the time frame of the trade. So how long is this going to last? Your risk and reward ratio. So how much are you willing to risk on this trade versus the maximum profit that you'd like to take? And then your trading style. So that could be a particular setup that you look for, or entry and exit criteria, bullish or bearish. That could also be moving average crossovers, price movements, support and resistance levels. So we're going to talk about a lot of this a little bit later on in the video, but there's so many different options for you to choose from, and that's why it's the options for me. So stay tuned to the end of this video. Now, in general, there are going to be two different scenarios where you're even going to want to exit a trade. The first one is going to be when you're looking to take profit, and the second is when a trade is going against you and you need to cut your losses. So two main components here to keep under control are going to be fear and greed. Fear of exiting trades too early and losing potential profits, and then a fear of trading period and losing potential profits. And on the opposite, greed keeping you in a winning position too long. So let's start with something positive. When your trade is going in your favor, it's important to have an idea of when you want to take profits. So this is going to give you an edge over your greed. And this can be a dollar amount or a percentage. I personally would go with the percentages because that can help you grow with your account. So something that you can do is once your trade has gained a value of 30 or 50%, protecting your profits, or at least making sure that you don't lose money on your trade, okay? One way that you can do that is by having multiple contracts open and closing one out and leaving the other one open. So booking returns on an option position allows you to really grow your account. Plus, in a volatile market with stocks having complete trend reversals sometimes in the same day, this is going to allow you to keep those profits. And you can even place a stop order slightly above your entry price or use a trailing stop to maintain those profits. Watch this video that I posted on using stop losses. I'll leave a link below if your trade is going against you. Keep in mind that trading options can be very volatile. It's not uncommon for you to see your trade drop to a 20-30% loss during the day, only for it to rebound to 50 to 100% profits the next day or even in the same day. And that's going to be depending on the stock. It could be, if you're trading something like Tesla, Amazon, Apple, depending on the stock, that's when you'll see those type of moves. But when you enter your position, set a stop loss. You can set a stop loss to cut your trade once it's dropped down a certain percent. And that depending on your risk, this can be anywhere from 20 to 30% of the premium amount. So you never want to lose 100% of that investment. You'll cut your losses and then move on. Limit your risk to no more than 50% on your positions. And then after you cut a loss, go back and review the trade. And a lot of times this is either going to tell you that this was either a bad trade or the wrong timing. Either way, it didn't work out, but you don't want to lose your full investment. Just take that feedback and go on to the next one. This is how you're going to grow and improve. Now, to the more theoretical analysis approach of when to close out of your trades. Now, you can use different charting methods to get an edge of when to close out of your position. Now, I'm going to give an example of a couple, but right now I just want you to pause this video right here and look at this list, okay? Just write these things down. So the first one we can talk about is price action. The more time you spend trading, the more you'll get a feel of price action, and that could be trend reversals and when the market is presenting trading opportunities. So that means it's going to be up to you to lock in those profits when you start to see price action patterns emerge. If you start to see a candlestick that shows that a trend is starting to slow down or that it's ending, then you can make your move to sell. So for example, an engulfing candlestick or a doji candle or even an advanced candlestick patterns like head and shoulders, cup and handle. You know, the list can go on. Just pick one that resonates with you and master that. Now, you can also use charting indicators or trend lines, support and resistance. Now, rule of thumb, whether you're day trading or swing trading, and really the only difference here is just going to be the chart time framing periods, you know, and the periods of your indicators. But you're going to have two different moving averages, one longer than the other one, and look for crossovers on these to gauge whether a stock is moving up or whether it's moving down. Now, I talk more about moving averages, crossovers, DMI plus or minus, and the RSI indicator in some of these videos here on where I talk about indicators. Okay, so make sure that you check these videos out. I'll have the link to this playlist below. So now with you having a variety of flavors on exiting your option trades, now you can build and manage your trading portfolio with more structure, strategy, okay? As traders, all you can honestly do is make the plan and show up. That's it. So a few things to go forward with. Learn how to profit on paper trading first before using real money, okay? Also, don't risk more than you can afford or are willing to lose. And don't risk your entire portfolio on one trade looking for quick profits. That's not the best investment. And if you lose more than 7 trades in a row, stop trading and regroup. Paper trade. And a lasting tip, it's good to set limits on the maximum amount of profits that you want to gain or lose in a day. So for example, if you have a smaller account, you know, you can look for a profit margin of maybe 1 to 10%. So if you have $1,000, 10% of that would be about $100 a day. And your maximum risk, you know, you can say $50. So if once you lose $50, stop trading. Once you've gained $100, stop trading. When you use percentages, that just gives you the opportunity to grow with your account over time. But that's going to be it for this video. Thank you guys so much. Make sure that you thumbs up, subscribe, and I'll catch you on the next video.